Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Good morning. We're seeing some Bitcoin action, actually some sell-off activity. Taking a live look, the CoinDesk Bitcoin price XVX index is currently trading at $44,584. Bitcoin is down about 3% over the past 24 hours, and the CoinDesk Ether price ETX index currently trading at $3,097. It is now down about 3.8% for the day. And the new DFX, CoinDesk's DeFi index, is trading at 665. DeFi also down almost 6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So looking at one story that has caught my attention personally is this hacker who pulled off the greatest hack in DeFi history. He's now returning the funds. On Tuesday, the hacker stole about $610 million from cross-chain DeFi platform Poly Network. And then on Wednesday, she started returning at least $342 million worth of those drained funds in the hack. So now people are wondering, is this a white hat hacker, or someone who just realized that, people can track your digital assets on blockchains and now is panicking and starting to roll back the funds? I don't know, Lawrence, what are your thoughts on this?
Oh, I mean, it could be a combination of two. I mean, look, the one thing we know is that they didn't take the $600 million and buy commercial paper with it. But that said, the thing that, what was interesting, speaking of which, is that Tether actually jumped to action and they froze about 30 some odd million worth in Tether, which they were crowed about having done that. It also raises the question about what's centralized and what's decentralized in DeFi. But this is a kind of a situation where you look at somebody who did this hack and then said right away or fairly quickly, I'm going to return it. I'm a legend. I'm already a legend. And, that kind of indicates that this person might have had actually some interesting motives. Although, why do that? As we were saying, why not send a message to Poly and just say, hey, you guys have a few holes in your security. And as I said offline to you earlier, personally, if there was a big hack and I didn't show up to work the next day, you kind of know what happened, especially if it was like 600 million. Just saying. So,
and there's still half of it that is still in the hackers' safekeeping. Emily, any further thoughts?
No, I mean, it's just never a dull moment in the crypto world. That's basically my thought. So.
Fair enough. Also, taking a look at our next guest, let's look at our Spotlight segment.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, crypto derivatives trading platform Bitmex announcing Tuesday it reached a settlement to pay a $100 million penalty to U.S. regulators. Among the civil charges include offering U.S. investors leveraged and unlicensed crypto products, inadequate KYC and AML safeguards, and processing more than $200 million worth of transactions for darknet markets or mixing services. And joining us now is Alexander Hoeptner, CEO of 100X Group, the holding company of crypto exchange Bitmex. Welcome, Alexander. So with this settlement, was there an admission of any wrongdoing or a subsequent, we will fix up what you've laid out as your concerns, including improving AML KYC, which is anti-money laundering, your customer provisions, limit leveraged products, or avoid servicing darknet markets?
Yes, hello. And firstly, we're very delighted to have reached that settlement with CFTC and FinCEN. And the settlement is on a no admit, no deny basis. And yes, we implemented as one of the first derivatives exchanges full KYC AML procedures already last year. So we have 100% fully verified user group now, which was seen not always positive from the community, but it clearly shows that this is the right way going forward, as you see that most of the regulators are now embarking on that journey. So for us, that was a journey that we started already last year, and we're keeping on doing this.
A question about Bitmex in general. We have been talking this week endlessly about the United States and the U.S. market and the infrastructure bill, but you guys operate globally, and I'm just curious if you could give us a little bit of the outlook, say in Asia, for example, what's happening in the Asian market, because we've been very U.S. focused on this show recently.
Yeah, I mean, Asia is for crypto trading one of the most important markets. Now, Asia is just not Asia. You have very strong markets like Korea, like Japan, Singapore with a new licensing regime just waking up after the announcements that they want to develop into sort of a crypto hub. Hong Kong, China, you don't know the developments that are going on there, whether more regulation comes to these markets or not. It's a very trading heavy market. A lot of countries, for example, Korea, very interested in leverage products, also from the classical financial world. And we have to see how regulators are now embarking on that journey of bringing the next maturity level to crypto trading, especially when it comes to derivatives markets, because most of the regulators are already tackling the spot markets and derivatives are the next big thing. So it's a little bit the same like in the US, where regulation just really is now embarking on the journey. You see the same pretty much in Asia.
Alexander, I want to get to that in a minute, but getting back to Bitmex, are there any employees there working now who may have facilitated letting U.S. users use the platform prior to the settlement? Have you gone through any internal investigations? Is there anybody there who who was involved in not putting in the safeguards, who's still employed there? Have there been any firings?
As you will understand, I cannot go into the details of the settlement or the process around the settlement. But as I said, we're very delighted to have come to that conclusion. And what I can say is that onwards going, we have a fully KYC'd and AML'd process house for the full group and all the services that we're offering. And so we make sure that going forward, we comply with all the rules and regulations that are put out there by our IOSCO jurisdictions.
So you were brought up to clean up Bitmex, if you will. Your competitor, Binance, is facing regulatory issues somewhat similar to what Bitmex faced. Do you have any advice for them? What do you think they need to do to change?
I think I cannot comment on that one too, as you can imagine. But generally, I mean, it's for the crypto industry it's not easy to maneuver with a developing regulation that we see in various jurisdictions. It's something that the industry has to do together with the regulators to develop the regulation different, maybe a little bit more advanced as we've seen it from the classical financial industry, because of the benefits that the whole blockchain technology brings to us. And I think we have to work together with the regulators on that one. And this is my general advice to the industry, if I'm allowed to say so, that we should embark on that journey together with the regulators and not let them work on that one. I think there needs to be still a lot of education around the possibilities and capabilities and maybe even some of the limitations.
Do you talk to Arthur Hayes at all, or Ben or Sam? Are you talking to any of those guys since all this happened, since you joined on? Have you spoken to them?
Yeah, allow me that I don't go too much into the details of the clear communication that I have with the board, but there's a general governance that is already and also tailored to the general requirements of regulation, how you operate a governance structure with shareholders as well as with the board of directors. And actually, in that sense, I do so.
Okay. And we just to let our viewers know, there are some criminal charges filed by the U.S. Department of Justice against former Bitmex CEO Arthur Hayes and other executives. So I wonder, is Arthur Hayes involved at all in Bitmex still as a chair on a board or any such role on the company?
As you probably can understand, I will not go into the details of any aspects of the shareholding structure of Bitmex. As I said, we are very delighted to have come to a settlement with CFTC and FinCEN. We are applying a clear governance structure that is required by all the jurisdictions for the classical financial world, as well as for the expanding and developing crypto world. And in that sense, we comply with all the rule sets that are out there. The company, as I said, is now ready to join and go on to the journey for beyond derivatives, so expanding into spot, custody, information products, brokerage, and education. And that's for us as a company the most important thing.
Does this affect your ability to expand? Does your ability to expand or change, is it affected in any way if you have people on your board who are currently under investigation or have charges against them by U.S. authorities?
Again, I won't go into the details there, but the company is not restricted by anything currently. What was very important for us was the settlement with CFTC and FinCEN, because there's a lot of interest in Bitmex, especially from the institutional side. And that's naturally a very important step for us to show that we're compliant with all the rule sets that are out there, especially with KYC, AML, and verified user groups. Because when you read what most of the regulators are currently looking at is exactly that point. So for the expansion for us into spot and brokerage and custody and attracting more institutional players to the crypto world, it was very important to reach that settlement, and that's done.
All right. And I do see that Bitmex is expanding, hiring in Hong Kong. So I see that you are moving into a next phase in the firm. Thank you very much, Alexander, for joining us.
Thank you very much.
That was 100X Group and Bitmex CEO Alexander Hoeptner. Coming up, checking in on Asia and the crypto markets update with Israel-based exchange eToro.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 12th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, Poly Network hacker returns stolen assets. Indian women lead the charge in crypto exchange account signups. And OKX lists Baby Doge, a spin-off from the Doge meme coin. Let's get you up to speed from Asia to the world. First up, an update on the Poly Network hack that saw around $600 million in crypto assets stolen. Following a plea from Poly Networks to return the assets and a chase from the China-based blockchain security company Slowmist, the hacker had a change of heart that saw around $260 million worth of the assets returned on Wednesday night, Asia time. Forecast News' Carolyn Wright has the latest.
In a tweet, Poly Network confirmed that $256 million worth of assets had been returned on the Binance Smart Chain, $3 million on Ethereum, and $1 million on Polygon. Since then, Polygon Scan said USDC worth around $84 million have been returned on the Polygon blockchain, meaning all of the tokens stolen on Polygon are back in safe hands. That's a total of $340 million as of 3 p.m. Hong Kong time Thursday. In a Q&A embedded within Ethereum, a person claiming to be responsible for the hack said they never intended to keep the assets and they were seeking to expose a vulnerability on the Poly network. One expert told Forecast News this will always be a risk with public chains.
Everybody can see the source code, so they can always find problems to do something damaging there.
The hacker says the rest will be returned slowly as they want to protect their identity and get some rest. Though as they say, no rest for the wicked. For Forecast News, I'm Carolyn Wright.
Meanwhile, in India, when it comes to crypto investing, women are leading the charge. Not only that, but Indian crypto exchange WazirX says many of the women signing up to open accounts with them live in the country's smaller Tier 2 and Tier 3 cities. Cities with 100,000 population or less, but with hopes far greater than that. Here's Forecast News' Monica Ghosh with more from Pune, India.
WazirX says it has seen user signups in those smaller cities explode by over 2,500% so far this year, with 55% of new user accounts created being located in them. And women from those cities contributed 65% of the signups by women for the whole country. WazirX told Forecast News many of them are very crypto savvy.
They have understanding about charting, they understanding about projects, and they have very good knowledge about how to sort of filter out good projects.
Some of these female traders told WazirX that crypto helped them achieve financial independence and raise their living standards. WazirX says this is a good sign towards India becoming a digitally empowered society and knowledge economy. For Forecast News, I'm Monica Ghosh, Pune, India.
And finally today, Seychelles-based crypto and derivatives exchange OKX has listed a spin-off from the world's premier meme coin, Doge. According to data from CoinMarketCap, the price of the baby Doge coin briefly surged 25% following the listing, only to swiftly return to its original level before continuing a downward trend. Baby Doge rose to prominence last month after Elon Musk tweeted his support by inserting its name into the lyrics of Baby Shark, the children's song that will be stuck in your head again all day now that I've mentioned it. At that point, the coin rose a whopping 800%. However, a recent article by David Segal in the New York Times shone a light on the underbelly of meme coins, with the author revealing he was able to set up his own coin for just $300 and that an expert told him he probably overpaid because it could have been done for as little as $8. Segal highlighted the growing criticism of altcoins, saying that a significant portion of the 70,000 such currencies in circulation are what he called hype coins with little to no real-world use case. Despite what could be seen as bad press there, Dogecoin itself is faring quite well on the markets, with its gain of over 40% in the last 7 days, outstripping those seen by both Bitcoin and Ethereum in a wider market surge. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Here's our live look at Bitcoin. The CoinDesk Bitcoin price XBX index is trading at $44,577. Bitcoin is down about 3.5% over the past 24 hours. And the CoinDesk Ether price ETX index is at $3,098. Ooh, flirting with that $4,000 line. Down, nevertheless, 3.8% over the past 24 hours. And the new DFX CoinDesk DeFi index is trading at 665. DeFi is down about 6%. And joining us now to discuss the crypto markets is eToro U.S. Managing Director Guy Hirsch. Welcome, Guy. So we've been seeing this big run-up in the crypto markets all week long. Now it appears a dip is in the making. Is it just profit-taking momentarily, or will we see a higher high later down the line?
Hi, pleasure to be with you. So yeah, I think this is a profit taken over the surge we've seen in past few days. And what's fascinating is that this surge is happening in conjunction with the infrastructure bill that is going through the motions in the U.S. Senate and U.S. House of Representatives. So I think that is fascinating. But yeah, I think that we're still bullish in terms of what will happen with the crypto markets until the end of the year. And so we feel it's just a slight bump, and we have a more kind of a brighter future till the end of the year.
So you just touched on my favorite market topic of the past week or so, which is exactly what you just said. Why are we seeing a surge with this infrastructure bill, which, crypto advocates are calling like a huge disaster for the US crypto industry? They didn't get what they wanted. Can you break this down for us? On the surface, it doesn't make a whole lot of sense, right? This is a negative headline. It's a negative regulatory headline. Why is the crypto market reacting in the opposite direction? Why are we seeing a surge?
I think that's truly fascinating. And I think it points to the fact that crypto is a global phenomenon. And so even if the world's only superpower, the US, is taking or about to take some adverse measures against the industry, and we hope obviously that it will be remedied through the reconciliation process between the House and the Senate, that investors and the market are thinking that there are still a lot of good things that are happening. Other jurisdictions are opening up more to crypto, and there's a lot of chatter about adopting Bitcoin as a legal tender in more countries. More institutional investors are getting into the space. So I think that the world is looking at it and say, look, this is not a US market, this is a global market, and overall things are looking optimistic. So why won't we invest? Why won't we buy more?
So, Guy, we saw some interesting things happening in the markets in terms of flows into and out of exchanges. Last week, we saw several, we saw several departures, if you will, of Bitcoin from the exchanges. That was along with the run up in price. And now, overnight, particularly, we saw a lot of, or actually in the past 24 hours, we saw a lot go back on the exchanges to the likes of Coinbase. What led to what caused the initial removal of Bitcoin from the exchanges, particularly like in Asia and things like that? Was there anything specific that we know about it? Any catalyst as to why Bitcoin was leaving the exchanges last week and why they're coming back on this week besides profit taking?
So I can only obviously guess, but I would say that whenever you have a regulatory action such as what's happening right now, maybe some people are worried about keeping it on exchanges or centralized exchanges and taking it off, taking it to private wallets, just taking some sort of a precaution. That may explain it. And then when they see that it's not maybe as bad as they thought, or maybe when more context is brought into the conversation, then you see activity back on these exchanges. I think that is one way to look at it. There might be some other explanations. And generally, when we look at prices, also kind of on-chain analysis, an indicator of price movements, we like to think or look more on sentiment analysis to try to understand what the market really thinks as a better indicator of kind of price movements.
Do you think that any issues with Binance might have had something to do with some of those Bitcoin leaving the exchanges at least last week, or what's happening now? Do you think that any issues or any concerns regarding Binance may have outweighed any particular issue in the U.S.? And so different kind of ways to deal with that problem with Binance would have taken place that would have outweighed any concerns happening with the U.S.?
I think that generally speaking, whenever you have a major player facing some sort of an issues, that it might have some negative impact on the market. But conversely, in contrast to that, we saw the industry coming together in light of what is happening in the Senate, including Binance, including us, including other players, and coming together as an industry. And I thought that was somewhat of a good moment in contrast to maybe some other news about industry players coming together, trying to play by the rules, trying to work with regulators and lawmakers to make the industry overall just better.
So just to follow up on this question, you're right. Like in theory, like the crypto is bigger than any one country. But why do the markets react so much more dramatically every time China has a crackdown? Right? China has regulatory crackdowns, and we see an immediate impact on the price. It's often short term, but we still see the impact, much larger impact than we saw with this pretty massive U.S. regulatory news. So how do you explain that?
I think that's a very good question. I think when China cracked down on mining activity, that sent shockwaves through the industry because a lot of big miners had to relocate or rethink their operations. and that has a lot of impact on the industry. I think in the US, people understand that this is a vibrant democracy. So even if a law is about to be passed that might have some negative impact on the industry, you can still challenge it in court. You can still wait for the next Senate or the next House of Representatives to maybe amend this. So it's not like a uniformity type of view. You have a lot of options in the US to try to make things better. So I think the impact on the industry is perceived as, let's call it as not good, but manageable, as opposed to what's happening in China, which is heavy-handed, and you cannot, get away with an order by the government to do something.
On a different topic, we're seeing an uptrend in large Bitcoin transactions on chain. I'm wondering, what do you think is behind these movements? Because we're not sure if they're buying or selling. We just know large sums of Bitcoin are being moved around.
So I think, and again, this is an informed guess, that more institutional players are coming into the space. And because of that, we see larger transactions, we see larger movements of kind of in terms of on-chain movements. And I think that is a good thing. I think that with the public announcements of various hedge funds, various large institutions coming into the space, even in light of everything we just discussed vis-a-vis the infrastructure bill, you would expect to see larger transactions happening. And so I think that is really at the gist of it. And we're going to see more because we are exposed to some other players that are contemplating getting into the space. And so I think just the avalanche of institutional investors will just grow, and you would see that pattern increasing.
So speaking about large transactions, you guys were involved in one involving a lease in Miami. What's happening in Miami? Are you guys moving? How's that been going?
So we're very happy to see Mayor Suarez leading the charge with regards to crypto and really be an evangelist to the industry. With other macro trends that are happening in other major US hubs, you see inflows of talent into Miami, specifically talent that's interested in crypto. And we saw that, and we want that talent to come work at eToro. And so this is why we announced. Yeah, go ahead.
Hey, have you taken a space yet? Have you what's going on with the size and how many people you got over there?
So right now we have about 10 employees in South Florida already, and we're expanding. And in terms of space, we're still looking, but I guarantee it will be amazing.
It'll be remote work, perhaps, to start. Guy, thank you for your analysis. If you're looking for a job, eToro is hiring. Thanks for joining us this morning. That was eToro U.S. Managing Director Guy Hirsch. Coming up, checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
As the company that launched the world's first ever Bitcoin ETF, we at Purpose chose the CoinDesk Bitcoin Price Index, the XBX, to price our assets.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Hi there, Nick. So the latest we've seen is that Gary Gensler has responded to Senator Elizabeth Warren's ask or request to figure out how crypto exchanges should be regulated. What did we learn? Because I understand the letter that the SEC chair, Gary Gensler, had written was made public yesterday.
Hey, good morning. Yeah, so Senator Warren's office published the letter that, SEC Chair Gensler sent her. And he basically reiterated, we've heard this from him before. He said in the letter that he believes the SEC needs greater legislative authority to regulate, spot markets and things of that nature within the crypto industry. And he, once again, pointed to stablecoins and DeFi and trading and lending as some of the issues he's looking at that he believes should fall within his agency's purview, but perhaps do not yet fall in there. And, I think it's not new. He hasn't said anything, especially new. He's said this in, public remarks as well as in testimony to Congress before. But the fact that he's now, directly saying that in public comments to a senator who is, I think, on the banking committee, if I'm not mistaken. So someone with, some jurisdiction oversight here. I think that's pretty significant, and it suggests the SEC is gearing up under Gary Gensler for, perhaps, if not more enforcement actions, then certainly a greater, tighter regulatory hand on this industry.
Is this because he's trying to jump in front of the CFTC, which is trying to claim some jurisdiction over crypto? We had the comments from CFTC this past week where they kind of tried to plant their flag and say, we've always regulated crypto in the futures market, and look at us, we're great. Do you think that he furiously fired off that email or letter to Warren saying, hey, no, legislate to make us in charge now?
Yeah, I think this is one of the big questions, right? The CFTC has traditionally claimed, jurisdiction over not just the derivatives markets, but also the spot markets for a lot of the cryptocurrencies that, are very clearly, or that are not very clearly securities. So, Bitcoin is probably the obvious example, but in recent enforcement actions, there's been, thoughts about Litecoin, for example. So I think, if this does become some kind of, regulatory legislative back and forth, I think that is going to be certainly an issue to be keeping an eye on is, just where do the lines get drawn? And, if there is some confusion, then, it could be that we end up having a somewhat more divided jurisdictional venue where if certain things are, explicitly carved out for the SEC, does that mean the rest is explicitly ceded to the CFTC, or, how exactly is that going to work?
Nick, it's been anything but a quiet summer on the regulatory front. Anything happening over the next week or so that we should be looking out for?
Hope not. I think we are entering, if not a limbo period, certainly it's going to be a little less exciting than the last couple of weeks, right? The House isn't coming back into session until the end of August, so we have a little bit of breathing room in terms of trying to figure out what's going on with the infrastructure bill. Regulators like the SEC are gearing up, but, again, the Senate's about to head out on recess, I believe, and at the very least, their main priority right now is the budget resolution. So there's, it's going to be, I think, an interesting fall, but it's very possible that at least the end of August will be a little bit quieter than, recent months have been.
All right, Nick, that may give you a bit of a break until then, so appreciate your update in the meantime. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Time now to check in with Crypto Twitter with our tweet of the day. And for those wondering how the House will take up crypto provisions in the latest infrastructure bill, Jerry Brito, Executive Director at DC-based think tank Coin Center, tweeting, the House is currently in recess and not scheduled to come back until August 23rd, though they could be called back sooner. We're taking a minute to regroup and begin coordinating with members who are supportive of our effort. We'll have more info soon. So kind of reiterating what Nick said. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.